Hey everybody, Dean and Dan here from SQ1. Welcome to our weekly podcast. Just want to mention off the bat here, we're very excited to be on Backer's platform. So if you like what you see when it comes to SQ1 and you want to invest directly with SQ1, you can do that through the Backer's platform.
Welcome to SQ1, the safe, fun, and easy place to get started in crypto. SQ1 was created for people who want to learn more about cryptocurrency and blockchain technology without feeling like you have to navigate the Wild West by yourself. Our platform will give you step-by-step instructions, a community to support you, and an app that will allow you to invest and trade in crypto in a sandbox without ever having to put in your own money. Our founders are financial advisors and learning specialists that want to empower you to gain the confidence and capability to navigate this incredible new space on your own. Until now, most people got started with the help of a friend or simply by combing through endless videos on YouTube trying to find the right information and more than often getting offered a scam or an invite from a self-proclaimed crypto guru. If you finally manage to get the info you need to get into the market and the timing is good, your investment goes up. If your timing is unlucky, you lose your hard-earned money. We see this as a real problem, and in this scenario is very much based on luck. We want to help educate you to be a better, more capable investor in the space, and only when you are ready, then start investing your hard-earned money. SQ1 is a safe educational space where we have curated the best step-by-step content so that you don't have to spend hundreds of hours trying to figure out who you can trust, who to believe, where the info is coming from, or who is paying to put this information out there. Our platform will provide you with all the info you need: news feeds, calendar events, live coin prices, fully vetted educational modules, and much, much more. Oh yeah, and did we mention that you can win big? That's right, in jurisdictions where it's allowed, our platform will include a fantasy-style mock trading game where you can win real crypto. Test your trading skills against your peers to see if your playfolio can outperform others in the contest. Become a part of our community. Apply to join the beta testing group at square1.io and to get live updates on our progress and information of our upcoming IDO. Join our IDO whitelist to be one of the first in line. You don't want to miss this one. Where do you start in crypto? Where everybody does, at SQ1.
Thanks for watching our video, guys. And just Dean, I thought it'd be a good opportunity for us to discuss from a financial advisor's perspective. We've both been financial advisors for years now, investing in crypto since 2017, and we've seen a lot of problems and a lot of issues, and just thought maybe it'd be a good opportunity for us to discuss what, from a financial advisor's perspective, what problems there are, ways that we can maybe help people to invest in this new asset class.
Yeah, I mean, right off the bat, we generally have to say in situations like this, we're not recommending that people advising people to invest in cryptocurrencies. We know that people are going to do this whether they hear it from us or not. But yeah, like having some perspective on, how investing in the traditional markets, what sort of lessons can we get from the traditional markets that we can then apply, to investments in other types of assets, whether that be crypto or any other asset class. There's some pretty basic fundamentals that people need to understand, right?
Yeah. And many, in my experience, and we've met a lot of people over the last year and a half or so that we've been building SQ1. We've met a lot of people. My experience is it's 20, 30, 40-year-old males for the most part that we see in this space that are investing. But I often bring up that article I read that 7 out of 10 people in crypto don't know what they're doing or don't know what it is, which is a real problem. And I think it's a big impetus for us why we started SQ1. And things, when we think about things like risk tolerance and structuring of portfolios in the traditional world, what do you think we could learn from that to apply to crypto or for people that are investing in crypto?
Well, the first thing that comes to mind for me is I wonder what the stat would be if they asked that same question about the traditional markets.
Yeah.
Right? How many times have you taken a client through a very, like, our process was very robust. I think we, the way we take clients through the financial planning process
Yeah.
is as good as it gets, right? So anybody who's been through the process with us, we expect that they've got a good understanding of what it is that they're investing in, and whether that's an insurance product that they're getting, or mutual funds, or segregated funds, whatever it is. And yet, how many times have you had, a 1 year review with a client? You've been working with them for a while. They've been putting money away into whatever products we put them in, and then they say, I really don't know what's
Oh
going
yeah.
on with any of this.
I
Right?
had a client. I was doing a review of something, and he had some money outside in an RSP, which in Canada is a registered retirement savings plan. And I asked him, I said, well, what are you invested in? And he said, oh, I'm invested in an RSP. I was like, okay, you have no idea what you're talking about.
Yeah, and I believe that probably 7 out of 10 people would say that.
Yeah.
I'm invested in an RSP. Well,
Yeah.
an RSP is not an investment, right?
Yeah.
It's an account,
Yeah.
right?
Yeah.
It's just a way that the government is able to track the investment so that they can give you a tax break now, and then you pay that tax down the road,
Yeah.
right? So yeah, so that's that. It's significant, but I don't know if it's that different. And this is something that we've been talking about for quite a while, Dan, that
Yeah.
the crypto space isn't that different than the traditional space. People think it's different and it's
Yeah.
new, but really, I think the main difference is that there aren't people like us for crypto, right? There's no licensing body. There's no
Yeah. Yeah.
like, even certified financial planners. There's no course of study when you go through to take that that designation. There's nothing in there about digital assets yet, and I think that this is one of the areas that I believe in the next 5 years will be addressed. I think that 5 years from now, so let's mark the date,
Yeah.
March 8th, 2023. Let's come back and look at this, March 8th, 2028, and tell me if there's not crypto advisors, or like,
Yeah.
basically every advisor has the ability to access crypto. And there's definitely, we can see progress towards this right now. But if people don't understand the assets, they need to be able to work with a professional, so that, really all I need to do is choose the right professional.
Mm-hmm.
Right. And I make sure that I've got someone who's got a designation, who I know, like, and trust. And, and then I can feel good that I'm giving my money to someone who's going to steward it safely. Like,
Yeah.
anybody who deals with, the stock market, like, obviously there's lots of people that do day trading and all that sort of thing. But for most people, all the options and all of the different financial instruments that you can get into, like, we don't, like, the average person isn't going to understand that stuff. And so they
No.
turn to a trusted professional. However, I do think, and I think this is kind of where you were going with the question, is that there are certain fundamentals about building a portfolio that people should understand. And I think that's the one part of our process that I think people do understand very well. Mm-hmm. And it always begins with a risk tolerance questionnaire, right? So this is really good for anybody who's listening. If you haven't been through a process with a professional, and you're sitting down with someone, if someone is making financial recommendations, like, I think you should do this, that, or the other thing with your money, excuse me, and they haven't taken you through a risk profile questionnaire, you probably should be questioning the validity of the advice that you're getting, and even potentially the validity of the individual themselves as a financial professional. Because I know for myself, I can't give someone advice about what to do with their money until I understand where they sit
in their situation and and that's, I think, one of the knocks in our world is expensive professional management, but there is value to it. And if things like rebalancing a portfolio, because most people fall in the balanced 60% equity, 40% fixed income, and they're sort of in that range where most people fall. Whereas crypto, it's that high risk. That's which should we have more than 10% of our portfolio in high risk? Probably not. But most people fall in that 60-40, and with professional management and there's rebalancing and things like that, so that you always stay within your risk tolerance, which there is value to that.
Can you explain, just for anybody who doesn't understand it, Dan, can you explain that a little bit? What do you mean by rebalancing? Why would someone need to do that?
Yeah. So as an example, if you go through the questionnaire, and as you said, it's quite robust. You go through these questions and their what ifs and timelines and when you want to access the money and goals and
your income,
what retirement looks like. And you just go through these questions, and then it sort of, based on your answers, it tells you where you fall in this spectrum of as an investor. Most people, as I mentioned, fall in the balanced, which is right in the middle, which 60% of the portfolio would be in equity, which are growth stocks, mutual funds, things like that. Whereas the other 40% is more on the defensive end, fixed income type of investments. And
so low risk, but also low yield.
Yes, low yield, exactly. So most of the growth, most of the time, comes in the equity part, except in a down market. But that's why you have 40% of your portfolio in fixed income, to protect you on the downside. So you're not on such a roller coaster ride. Right. It's not as violent up and down. It smooths out that ride a little bit, the volatility of it.
And ideally, the basket of goods that's in the fixed income part of your portfolio is ideally negatively correlated. In other words, when markets go down, bond yields usually go up.
Yeah,
right?
exactly.
So your bond, so again, 2008, your equity went down by 30%, but bonds went up by 10. So now you're only really down, if it was 50-50, you'd actually only be down 20 instead of 30. And that's what it's meant to do.
Yeah.
Right.
Yeah.
Okay. So why would I need to rebalance then? Explain that.
Well, that's one of the things is, so if you go through these questionnaire and you come out as, okay, based on my goals and what I'm trying to accomplish and my time horizons and these types of things, that I'm a balanced investor. So 60% of my portfolio should be in equity, 40% fixed income. And we're going through years where there's lots of growth in the equity markets, and that equity market, all of a sudden it gets skewed. Now all of a sudden that 60% can become 70 or 75. And then that balance of 60-40 might turn into 70-30, 80-20. So what a professional management does is it brings you back to that 60-40, so that you're always in the right risk tolerance for what you're trying to accomplish.
Right. And the thing I like about that, and I think this is the point that you were getting at, is that's why you pay those fees.
Yeah.
Right. Because as an independent person, I'm not going to be managing my portfolio like that.
No,
it's just not going to happen. Now, again, I'm not really super familiar with some of the things like Wealthsimple and everything. So the dynamics of the finance world have been changing. And it's entirely possible that you can have automatic rebalancing in some of these accounts and stuff like that. So there's definitely a lot more sort of DIY going on. And again, I'm not pro or, I'm not for or against that. But obviously I've been in the industry for long enough to feel that the things that we add to someone's situation more than makes up for the fees that we pay. Like I had an example once. I always love to tell this story because this was a guy, I knew him fairly well. I wouldn't say he was a friend, but he was an acquaintance. Started working with me, had his TFSA with me and his RSP. So it's a tax-free savings account and an RSP.
Yeah.
So he lost his job. Hadn't yet, a few months had gone by, hadn't yet got a new job. And he was basically telling me that he was just going to manage it all himself because he was looking at the fees that he was paying me, and he didn't really think it would be worth it. And so I asked him, okay, so tell me, what's your plan? Right. So you've got this situation where you don't have income. He's like, oh, well, what I'm going to do is I'm going to withdraw from my RSPs. I'm like, okay, so here's an example of how I'm earning those fees. So you withdraw from your RSPs. It's a taxable event. You think that that's okay to do because, hey, I'm not working right now, so my taxes are going to be low. And I look at it and I say, hey, you're an eminently employable guy. very good at what you do. I really don't see you being out of work for very long. And so even though you've been off work for 6 months, it's the beginning of the year. And so what's going to happen is you're going to end up getting a job. You're going to make a ton of money. And then you're going to have to pay even more tax because you withdrew from your RSPs.
Yeah.
So what I would suggest is that you take that money from your tax-free savings account, right? Because you can always put it back.
And
right?
it's not taxable. That's the part of it too.
And it's not taxable, right? And at the end of the day, I think, I just did some quick math and I said to him, look, assuming that, you only work for half of this year, yada, 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 his route would have probably cost him like $2,000 in taxes that my route wouldn't have cost him at all.
Mm-hmm.
Right. And so I said, okay, so now when we look at the fees, I think the fees, it was like $100 or $200 a year.
Yeah.
Because he didn't have a huge portfolio with me or anything like that. So I said, okay, so that now pays for 10 years of my fees. Right.
Yeah.
And so this is what people need to understand is that, sometimes you need to pay a professional to get, the kind of advice that's going to save you money down the road.
Yeah.
Right.
And things like diversifying your portfolio and one of the things I see in crypto is most people are trying to win the lottery. Like they haven't gone through, well, especially since 2008, I would say a lot of people that are in crypto haven't seen anything but a bull cycle, in the traditional space. So in crypto, it's a little different. It's a lot more volatile, but how people invest in crypto it's very different because there's no advisors. There's a lot of times you see these people watching YouTube videos or they talk to a friend who they know has been in crypto for a little while and they're relying on that advice to invest their hard-earned money. And a lot of times people lose it, which is unfortunate.
And the one thing I wanted to say, just to tie it back to what we were talking about earlier, is this idea of rebalancing, right? It's not just that, oh, hey, you're now outside of your the risk tolerance that came up on this piece of paper,
Mm-hmm.
right? What it does is it forces people to be less emotional, right?
Yeah,
Because everybody understands buy low, sell high, right? Like if you say to somebody buy blank, sell blank, like what are you supposed to do to invest? People will say, oh, buy low, sell high.
And human nature is the opposite.
Human nature is like everybody wants to buy a winner, right? Nobody's buying Ethereum when Ethereum's down at $1,000, or nobody's buying Tesla when Tesla's down. They're just like, oh God, like, everybody's selling it. And yet, we hear these things like Warren Buffett says, be greedy when others are fearful and be fearful when others are greedy. Like we all know these things, but there's this emotional component to money
that's a very good
gets
point.
us all twisted up, right? So the thing about rebalancing, especially for me, like, again, I didn't want to have to go in and like do trades and stuff like that for all my clients, right? So I generally set their accounts up to automatic rebalance, and you can set it, if it's a 2%, a 5% difference, and then it'll go in. And what it does is, in that example, okay, so now it's 70% of their portfolio is equity, and it should only be 60. So what happens? It goes in, it sells 10% of the equity that's obviously doing really well, right? It's taking risk off the table. So now instead of 70% of your portfolio being in equity, it's back down to 60. But what you've done is you've increased the fixed income side of the equation, right? So what that means is that 2 months from now, when the market crashes, right, you're not going to have as much in that equity side of your portfolio that's going to be impacted by that drop. And here's the thing, if we're going to tie this back to crypto, and thank you for bringing it back to crypto, right? People aren't doing that. Nobody's doing, hell, I didn't do it in the last bull run.
No, I know.
And why? Because just because you're a financial advisor doesn't mean that you're not subject to the same emotional upheavals that I was like, Bitcoin's going to the moon, baby. We're going to hit 200 grand and yada, yada. And really what I should have done is, once we hit a new all-time high, once it was at 50, 60,000 US, I should have pulled 25% of it off the table, pull the risk off the table and put that into and again, in the crypto market, that would be the equivalent of like a stable coin. Like your stable coin is your fixed income. Or, some people look at it like Bitcoin and Ethereum are kind of the blue chip cryptos, and that's a bit safer, and I think it's played out this way. I think if you look at it, like a lot of the altcoins, especially some of the smaller cap altcoins, they dropped a lot more than Bitcoin and Ethereum did in this last run. Right. So there's some, you could sort of look at it as, your fixed income is a stable coin. Bitcoin and Ethereum are sort of like lower risk equities, right?
Yeah. Like a bank stock or something like that.
Yeah, exactly. Some, maybe a really well diversified mutual fund or something like that. But at the end of the day, I think the point that you were getting at is that people aren't doing risk tolerance questionnaires before they invest in crypto.
No,
right?
No, they're just winging it.
Do you remember the chart that we used to have to show clients, and it showed all the different assets on this spectrum?
Oh yeah.
And it would be like, here's your bank account, and here's bonds and treasury bills, and balance mute, and it goes all the way up, and it had like fine art and jewels or something at the top. And I used to joke with clients, I'd be like, Bitcoin's up. Bitcoin's up there, like somewhere around the ceiling.
Yeah. And then altcoins are even further
than that. Yeah. They're pretty much like the moon. And that's why they say go to the moon, because that's where their volatility and their risk profile is.
The other thing that ties into that too is this whole thing around FOMO, the fear of missing out that we see in crypto. And I've fallen for it as well. Like I had a buddy of mine who I used to talk to about crypto, and he had 20 grand. He invested in a company called Ant Shares, and Ant Shares turned into Neo, and his 20 grand turned into $1.2 million. And you hear these stories, and I'm sure most people have heard these stories, that you don't want to miss out on that thing, that the next hot thing. And you start throwing your money at this without doing due diligence, without doing your homework, without having someone to talk to. And that's another big problem in the space is just that whole FOMO thing that we all fall for, rather than taking a break, sit back. And the other part of it is knowing when to sell, knowing when you should sell, and what part of how much of your portfolio should you sell.
And again, in the traditional space, you've got someone to ask about that. You've got an advisor, right? And one of the beautiful things about blockchain and crypto is self custody.
Yeah,
right.
And I'm glad you brought that up. I meant to talk about that.
Yeah, because it really is both the best part of it, and the worst part of it.
Yeah.
Right?
Yeah, because there's no recourse.
I don't think there's a lot of people that are really, really ready to self custody. That really understand it. I mean, like I lost my keys to a wallet that I had on my phone, right? And I didn't understand when I first, and likely there was like, $20-$50 in Bitcoin or something on it at the time. But I learned and I consider myself fortunate that it happened with $20 or $50. Cause I'm like, oh, now I get it.
That's a lesson.
Now I understand. It's a lesson learned. And this is one of the things about Square One. It's one of the things that really made this project compelling for me, is this idea that we can get people to practice this stuff, right?
Yeah.
Because you don't have an advisor you can turn to. It's all on you. And what do you know? Right? 7 out of 10 people don't even understand the thing, right? How many people have actually taken the time to like delete, like actually lose their wallet, get rid of it, it's gone, and recreate it from scratch using their seed phrase? If you've never done that, by the way, if you're watching this and you have crypto on a wallet, again, I don't recommend doing it with all your crypto in there, but get a new wallet, destroy it, and rebuild it again from the seed phrase. It's quite put a little bit of crypto, because I remember when it happened to me the next time. So it's happened to me a couple times, and I recreated that wallet from the seed phrase, and all my Bitcoin was in there. Like it was such a relief, number one, and then also it really instilled confidence in me in that process. So now I know, okay, so I understand the value of those seed phrases, right? I now have 2 copies of it. One's in this, like, they're in safe places.
You want to explain what a seed phrase is?
Yeah. So for anybody who doesn't know, when you first download a wallet, it's as you go through the process, it's going to say, get out a pen and paper, because we're going to give you your backup seed phrase, right? And again, seed phrase, because it gives you the seeds that you would have to plant in order to regrow the thing from scratch. And it's generally 12 or 24 randomly generated words. And you just write and again, old school, pen and paper, goes in your safe, goes in your safety deposit box, right? Somewhere where someone's not going to be able to find it. And if you ever lose your access to this wallet, you can recreate it. You just go back and you just download the app. Like, I think what happened to me the second time was my phone died. Like, it was just dead. Like, I couldn't get at it.
Yeah.
And so I got a new phone, and generally you just go in and Google like backs up all of your apps and recreates the whole thing, but it couldn't recreate this one, right? And that's a good thing, because if someone hacked my phone or made a clone of it or something like that, that means they're not going to be able to get my wallet. So I went back, I grabbed my seed phrase, I went through the process, and I just entered these words in order, right? And boom, there's my wallet again.
It's back.
My Bitcoin's still in there. Because again, we have to differentiate between this idea of a wallet. Because when I think of a wallet, I think of my physical wallet, and I've got $100 in that wallet. If I've lost the wallet, like, I don't get that $100. Even if someone finds it usually and somehow gets the wallet back, like, I expect that $100 to be gone, right? It's sort of like if it comes back with the money in it, I'm like, wow, who was that? Like, did Mother Teresa find my wallet? That's amazing.
Yeah.
Right.
Yeah.
But in the case of crypto, like, it's not the same thing. Like, even describing it as a wallet, like I think a key is a better description for it, because really what it does is it's just it's proving to the blockchain that you are the owner of that particular bit of code, right?
Yeah.
So those 0.25 of a Bitcoin or 1 point, or, if you got 10, great, good for you. Whatever the case may be, that amount of that crypto is yours. And how do they know it's yours? Because you have the key.
Yeah.
Right.
It's
That's
on
what
the
your
blockchain.
wallet is. It's on the blockchain. That's been allocated to you. Right.
Yeah. And you hear that story about that guy who lost his in a dump somewhere. I forget where that was.
Yeah. He wants to dig up the entire LA landfill.
Yeah.
Find that.
Because it's tens of millions of dollars, I think.
Yeah. Like, wasn't it like, I think it was hundreds of millions. I think it was, I think there was like 3,000 Bitcoin on there or something like that. Yeah. Like insane. That, And I hear he's getting closer.
Really?
He might actually be able to do it.
Wow.
He's raised a bunch of money and stuff like that. And he's got, it's just permits or something that they're trying to do. But, I think insurance was the whole, he was trying to get someone to insure the project.
Okay.
Yeah. So
now we don't have a lot of time left, Dean, but you brought something up. You touched on it earlier that I've been meaning to ask you, because I don't know a lot about this, but advisors in crypto. Now, is there, you had talked to me before about them there's some crypto advisors in the US or something like that. What's going on there? Because I don't know much about it.
Digital asset advisory group. I can't remember the name of it offhand, but I did look into it. And again, it's sort of a certification program that you can take, and then you get this designation, right?
Yeah.
Digital asset certification or something like that.
Yeah.
And again, it seems to me to be somewhat self-regulating. Like I don't know if it's tied in with any other sort. I would like to see it be connected to the CFP, right? I think most people see certified financial professionals as being sort of the gold standard when it comes to financial planners, and so I really think that the organization itself, like I know in Canada, it's the Financial Planning Standards Council that looks after that. And I think that once they incorporate digital assets into the CFP, that's when I'll say it's gone mainstream for me. Yeah. So this is a good step towards that. I think these people putting this together. Like, I looked at the syllabus and I was like, yep, That seems to be the things that people would want to know. And it was immediately interesting to me. So if there's anybody that's out there that's in the industry already, sort of interested in this space, I'd look into it. I don't think it could hurt your business to understand digital assets. Now, granted, mutual fund dealers association and a lot of life insurance companies, they tend to not like people that are licensed with them talking about digital assets. But again, we can play the safety card over and over and over again. But the fact of the matter is, these institutions are threatened by crypto, right? In my opinion,
they need to embrace it.
What's that?
Or they need to embrace it.
No, what I'm saying is I believe that they are currently threatened by it.
I see.
They feel threatened by it. That's why if you're doing a lot of crypto stuff, your bank will shut you down, right? Like, this just even with Square One, right? Trying to get bank accounts. Can be very complicated. And luckily for us, like we're basically a Web 2 project, right? This is about educating people about crypto. We haven't launched a token of our own or anything like that. It's definitely one of the things that we had sort of looked at one point. But we recognize that we don't actually need to be an actual crypto to teach people about crypto. And that's what really helped us get a bank account. But I know, we're even hearing about it in the news about how Tether, when they were first starting out, they did some they made it sound like it was shady stuff that they did to try and get bank accounts. But I think anybody who's been around the space long enough or reads that article would just say, well, they had to, because no banks would give them give me a break, guys. And again, I'm not necessarily a big fan of Tether. I think that they're extremely opaque for someone who's in an industry that transparency is such a huge part of. And I would love to see Tether be much, much more open with their books so that people can really ascertain where they're at. I think it's a huge, huge challenge for this, like a $70 billion elephant in the room. Tether and how well back they actually are. But of course they had to do some shenanigans in order to get bank accounts because banks didn't want to deal with anybody that had anything to do with crypto. Right. Again, because they're threatened by it. Like if you can do DeFi in crypto, if you can store your assets in crypto, if you can interact with people in crypto, sorry, why do we need banks again? Oh yeah, we don't. So they're gonna hold on tooth and nail because they see the writing on the wall, right?
It makes sense from a business perspective.
Yeah, I mean, if you were making buggies when Ford invented the car, like you probably would have been trying to get him shut down. Yeah, right? He's going to put all the buggy whip manufacturers out of business. Yeah, and he did.
Yeah,
right.
Yeah, that's for sure.
Yeah.
Well, one last thing I thought I'd ask you too, just and I'll go first about the future of crypto and where crypto's going. I feel like if history has anything to do with where we're going, with the halving coming up in early 2024, we usually see a bit of a ramping up pre-halving. So I guess I'll go on the record saying that I feel like we're in for a little bit of a rough summer, or maybe a sideways summer, but I feel like third quarter, fourth quarter of this year, we'll start seeing the crypto market picking up again. What's your thoughts?
I agree as far as the price of Bitcoin goes, but you and I have talked about this quite a bit. I'm bullish on security tokens.
Yeah.
Right. I really think that so many people have been burned so many times by vaporware. Yeah. It's kind of out in the ethos now that, like, if it's just a project with a great idea and a white paper and they've got all these tokens that they put, like the FTT token, I think really highlighted this for everybody. Like that was the problem, right? Yeah. So much of FTX's balance sheet was comprised of their own token, right? This thing that didn't necessarily have any intrinsic value. So it's one of the reasons why we're working with backers is they're tokenizing equity in companies. So, if there's a Square One token that represents a share of ownership in the company versus a Square One token that's just a token. You can use it to play the game and everything like that. There's intrinsic value in each of them, I believe, right? Just like I do believe that there's intrinsic value in Bitcoin. Don't get me wrong, but when you have something that's backed by a real world asset, and especially something that has to go through the regulatory process in order to even make it on the market, I just think that has appeal to people. I believe that the crypto market will continue to go because again, this idea of going through regulators and everything like that is somewhat antithetical, I think, to like just ideologically, people don't like it, right? I don't want to have to tell the SEC what I'm doing and all that stuff. And so I think that the crypto market, I think what we're going to see is we're going to see two markets going side by side, right? And obviously the crypto market has a huge lead already. The total market cap of whatever it is, $1 trillion. I don't know if the security token market even has 100. I don't think it has even 100 billion right now. But I kind of see this as being the VHS Betamax battle of the digital asset era, right?
Yeah.
And I don't know which one. Like I think probably crypto will eventually. But I think what you're going to see is that because of just the sentiment right now, I think you're going to see the security token market ballooning. And then over time, I don't know, maybe crypto comes back because people realize that they're just going to they're just going to buy security tokens if we're just producing vaporware. So it kind of
it also seemed like that in 2018 when everything went to.
Yeah, but there was
90%.
no option in 2018. There was like security tokens weren't really a thing.
No.
Right. So now people have the ability to access the liquidity to be able to utilize tokens, but have them backed by real world stuff. Right. And I just think that what you're going to see is like a lot of people that were on the sidelines that were very interested in crypto because it's a brand new technology. It has a lot of there's a lot of really interesting elements to it that people want to be able to, to utilize and to be able to get behind, but they're just the whole FTX and all that thing is just too scary. And so they're like, oh, here's this other thing. It's like a bridge, right? And that's why I say, I think the security token market will take it over, but then I think you'll see crypto just blow it out of the water eventually, because all of these problems that we've seen and everything like that are going to be fixed. So that's my take.
That's yours. Well, I'd like to thank everyone for their time. It's we're excited to be on Backers here, and if you like what we're trying to do here at Square One, then you have the opportunity to invest in our project on backers.ca. We're trying to raise capital.
Welcome to Square One, the safe, fun, and easy place to get started in crypto. Square One was created for people who want to learn more about cryptocurrency and blockchain technology without feeling like you have to navigate the Wild West by yourself. Our platform will give you step-by-step instructions, a community to support you, and an app that will allow you to invest and trade in crypto in a sandbox without ever having to put in your own money. Our founders are financial advisors and learning specialists that want to empower you to gain the confidence and capability to navigate this incredible new space on your own. Until now, most people got started with the help of a friend or simply by combing through endless videos on YouTube trying to find the right information, and more than often getting offered a scam or an invite from a self-proclaimed crypto guru. If you finally manage to get the info you need to get into the market and the timing is good, your investment goes up. If your timing is unlucky, you lose your hard-earned money. We see this as a real problem, and in this scenario is very much based on luck. We want to help educate you to be a better, more capable investor in the space, and only when you are ready, then start investing your hard-earned money. Square One is a safe educational space where we have curated the best step-by-step content so that you don't have to spend hundreds of hours trying to figure out who you can trust, who to believe, where the info is coming from, or who is paying to put this information out there. Our platform will provide you with all the info you need: news feeds, calendar events, live coin prices, fully vetted educational modules, and much, much more. Oh yeah, and did we mention that you can win big? That's right, in jurisdictions where it's allowed, our platform will include a fantasy-style mock trading game where you can win real crypto. Test your trading skills against your peers to see if your playfolio can outperform others in the contest. Become a part of our community. Apply to join the beta testing group at square1.io and to get live updates on our progress and information of our upcoming IDO. Join our IDO whitelist to be one of the first in line. You don't want to miss this one. Where do you start in crypto? Where everybody does, at Square One.